there it is. Doc from North America. Another fun-filled day. Here we go again. Market's bouncing back from over half of what it lost yesterday, from the high to the low. I understand most of the Asian markets are going to start to open up tonight, which could be very interesting. The great debate right now is Evergrande or Evergrande, or however you want to describe that name of the company, now trading at 33 cents a share. Basically, needs to be bailed out. They have about $200 billion worth of risk. I know China doesn't have that type of money, as much as they like to pretend that they're the second largest economy. Whereas you can see where like the ECB can throw $60 billion out the door every month with no problem whatsoever, or the Federal Reserve can do $160 billion every month with no problem. But China doesn't have that type of dollar, that amount of equity. So, the markets are going to be kind of stalled. They're going to be kind of trapped. We'll see. I think the Federal Reserve is going to come in and bail it out, since they, this particular side of the political spectrum loves China and thinks that everybody should be invested in it. So more than likely, there will be some type of bailout. It just, it won't be the People's Bank of China doing it, but they'll do it in some type of other name. That's how it'll kind of play itself out. It'll be, because the Chinese government itself has said, forget about it. Let it downsize. Who cares? And they don't really care about the world markets. They just want control and power, because they're just like the Democrats here in the States. They just want control and power. They don't really link it in any other financial way. I mean, we're looking at Western markets at all-time highs overall, well beyond any of the price tags that you would normally spend money on. You have 18 trillion throughout the world in bonds, notes, so forth, not paying any interest. And when you buy one of those, that 18 trillion, you have to pay interest to the government to own their bonds. So, the reality, which what we talk about here at Doc's webinar every day, the reality is just that. Just a montage of funny little stories of crazy. And so that's what we deal with every day. So anyway, there you go. You can see the Swiss, to me, says things are calming down, because they're finally selling the dollar again, which is interesting and nice, to see it pare back a little bit there. You can see it there on J4X, same situation. It's selling down. There's some pressure there, so the dollar is moving back down again. And that's usually the place they run to when the markets get nervous and look like it's going to go into some type of calamity of some form, and that's the way it rolls. So where are we at this point? I guess, so that is the action we see tonight, for us in the U.S. For some of you, it's already tomorrow, and you're just waiting another, what would be about another 11 hours. Hong Kong will trade, Shanghai will trade. We'll see how they treat those stocks. And like I said, the Federal Reserve has a long reach around the planet. So it'd be nothing for the Federal Reserve to step up and do some buying through surrogates. And next thing you know, the Chinese market is not falling. It's climbing. So, I have to giggle at that stuff myself. And we're in quantitative easing era. This is the way it rolls. I know it seems surrealistic or fantasy-like, or however you want to describe it, but it is the natural way now. In other words, it just is, and that's why we have cryptocurrencies, because people have no confidence in the central banks. A lot, not no people, because we have a political party here in the States that lives and dies by the Federal Reserve at this point. But the overall, I think people across the planet have their doubts about the legitimacy of central banks anymore. And that's hence the reason why we have cryptocurrencies. And so as long as there is Federal Reserves and ECBs forcing people to invest in, like right now, let's, where does Doc come up with the idea that things are overpriced? Well, we have an inflation rate of 5.5%, but they're trading bonds at zero or minus. 18 trillion of them, not billion, not million, but trillion. Okay? Well, that is a tip off right there alone. That's like, if you would, that's like that story I always say. If you would have told me in 2007 or 2006 what 2008 would have looked like, and what do I, and then the question would have been like, well, Doc, what do you think gold should be if this whole scenario plays out that we live in today, of course. But if someone had said that in 2007 or 2006 and said, Doc, what do you think if life was X, and now we do live in X, I would have said, oh, gold probably is going to be between $3,000 to $5,000 an ounce. Probably found a way to spike itself to 10,000 or 9,000 something, and then settled down in the $3,000 to $5,000 range. But where do we see gold today? Let's just throw that up on the screen real quick. Hey, Robin, how you doing? Hello, Douglas. How you doing? Good morning. Let's take a look at gold just real quick. Just a fun time to to take a look at the product. And we'll see. Where is gold today? Right there. And gold is trading at $1,771. Well, that puts it about $1,228 or $1,200 or $1,300 under the bottom end of the range I would think gold would be trading. And not counting the calamity that we're going through right now, you would think it would be trading at the top of its range of like 4,000 something or 5,000 something, and people would be walking around talking about how we're going to see $9,000 gold again, like we did in 2010, that type of thing, or 2019 was it? When did we go to 2000? Was it? I think it was in 2000. So we can get a view of that. There's 17 all the way back to. So we'll have to go to J4X for it. Let's go to J4X. When did gold hit $2,000, $2,100? Let's take a look and see. I think it was during the pandemic start, right? So there it is, right there. There it is on J4X, and it'll fill in there. There we go. And then what we'll do is we'll slide it to when it went to the 2,000 mark. There it is. And that was when was that? That was in 2020, yeah. So, people would be saying, well, maybe it'll run back up to the $9,000 area like it did in 2020. But no, we're in an era now where the central banks control everything. So will they find a way to bail out Grande? Of course they will, because it foils the Chinese. The Chinese want Grande to go bankrupt, and they're not willing to pay for it. And X has said that. So someone's going to have to bail them out. And what's another $150 billion? It's not trillions. What's 200 billion? So they'll step up. They'll start buying the stock. Stock will start getting bought. All of a sudden, the shorts will be squeezed. They'll come in and take care of the other 40 or 50 billion. The stock will move up to, like it'll look like Deutsche Bank now. Pretty much, that's what'll happen. It'll look like Deutsche Bank or Citibank in New York. Citibank in New York trades at $70 a share, but its all-time high is $661. So the all-time high is $661 a share. It's trading at $70 a share. To me, that's bankruptcy prices when you're that far away from your all-time high. Same thing with Deutsche Bank. Deutsche Bank trades, $12, $8, $5, something like that. I don't even look at it anymore. And its all-time high is like, $175 a share. It's a bankruptcy price. They keep it alive by name only, just like Merrill Lynch is kept, and Lloyd's of London is kept, Santander is kept, and Bank of Scotland is kept, and HSBC is kept, and then the rest of them are all merged together on some level. Like I said, Merrill Lynch is owned by, Bank of America. I just want to lay out that understanding. I want you to see what Doc sees, and then you can say, well, Doc, you're crazy. That's not real. And I go, oh, Merrill Lynch is not owned by Bank of America? Or Citibank didn't trade at $661 a share at one time? These are just real numbers in real time. That's all that is. All right, we're done. Don't need to beat you up too much over this. I just want you to understand, be careful tonight, because we may see another wild day tomorrow. I don't have confidence that much in it. I was tempted to go buy more puts. I bought puts Friday, and binaries on Friday, and rode them down into like 4 in the morning, 5 in the morning on the U.S. market, and then took off the rest of them somewhere around near the $900, $850 area on the Dow. But I don't have that much confidence that there's going to be that much selling, because I do believe that the Federal Reserve will find a way, and the ECB will find a way to prop this thing up, and they'll chill out, and the Chinese will go, oh, they bailed it out. So they gave us $100 some odd billion. And it saves the world economy. Because remember, there's probably some type of contagion there. And, to keep the markets propped up like this is a necessity. I know it sounds all odd and so forth, but it is a necessity to keep the overpriced market. I mean, you have 18 trillion trapped in assets at negative. Remember, managers are paid to make money, not lose money. If managers were paid to lose money, everybody would be a manager. That's pretty much what it comes down to. All right, we're out of here. Let's jump over back to the Swiss, and let's take a look at the currency pairs, and we expect to see some strength, and we're seeing it there. So you can see there the dollar is moving back down again, so things must be calming down. And that could even be the central banks doing it. It doesn't really matter. Let's jump over to the euro. See what the euro's doing this morning. I've been a little bit surprised more that they're not bouncing the way the Swiss is. There's the euro there. It still hasn't turned up yet, and the same thing is appearing on Chicago Quant. Is at the, let's see, where is it at? Right there. And so the same situation is, our line is turned just like the way J4X is turned, and you can see we're flirting back with the weekly buy after that 1 week of nervousness coming into Friday, knowing that the U.S. That's what made me comfortable buying those put binaries and put options. I saw that and I knew for sure it was free money, and it was. Yeah, and so that helped out right there, and I think we're seeing the same action in the cable too. The cable's doing the same thing. Let's take a look at that. And there's the cable trying to do its little bounce thing, and we have that going on right there. Let's put a little circle around that. Right there. Oh, no. Let's fix that. There we go, that's better. And so you see that's bouncing through the buy area very easily. Our dailies are still having some issues, but they are firming up. Let's move that over on J4X. See the same action. I'm sure you're going to see that curve up on the white line. And if not, it's going to be flat. Okay, yeah, so it's still a little flat with some red. And just like we are red here, right there with all these red dots. And we'll start to see, I can tell you our line has turned up a little bit. Let's tighten that up, you'll be able to see. And not that, this one right there, there we go. There, see that? You can see it's turning up right there. And this will start turning up over the next hour or so on the J4X, you'll see that. And we'll watch see how the action turns, the action of, it'll be interesting. Like I said, CCP has no interest, the Communist Party in China has no interest in bailing out this situation. Their chairman or president, Xi, has said no way, no how, and that leaves it into the hands of the Federal Reserve. And what's an extra $150 billion? It's nothing. That's like, 1 month. That's nothing. I was explaining to somebody last night how the Federal Reserve pumps in $160 billion a month in new money, and then also rolls over old positions at the same time that expire each month. Remember, it's going on to 13 years now of the QE. So you have, they're buying all kinds of things. They buy the 30-day, they buy the 90-day, they buy the 2-year, they're buying the 4-year, the 7-year. Notes go all the way up to 7, and then actually 10 to 10-year notes and bonds meet each other in name. So when you're looking at a 10-year in the United States, we also offer 10-year notes versus 10-year bonds. And then from there, you're going to be looking at, we're going into the 13th year now. So, was it 13th year? 14th year, 14th year. So they're rolling those things over too. And you got to imagine that they bought, in the secondary market at times, they probably bought, 15-year, 20-year that have already rolled over. So they're not rolling new issuance of 14-year, but they're rolling old issuance in the secondary market. I'm sure they're rolling those. And so, we don't even see the rollover. Well, we do see the rollovers. That's why I can say that they do it. We see the tail. We see the auction. We see that it rolls over. We see how many are bought by dealers, and then how many are bought by foreign investors. We always assume that rollover, and they always say that they will buy the rollovers if necessary. So we just don't know exactly who is buying them, if it's dealers in the United States buying it for the Federal Reserve or foreign buyers buying it for the Federal Reserve, but we know it's bought for them. Matter of fact, what happened was it, I believe, I know I'm getting deep in the weeds here, but I just want this to be recorded for posterity. But we saw the last auction where the market went a little wild, on the downside, because the tail was great, but the problem was it wasn't dealers. And so in the United States they were buying it. There's a select group of buyers that are referred to as dealers, and they have the first rights to buy, and then they distribute it to the public for like a 1/16 or an 1/8 or a slither, a 32nd profit. It's just like an arbitrage. So, all right, we're done. We're done out of the weeds now. We're just going to stare at charts. And if anybody sees anything they would like to talk about or look at, just give a yell. So from the cable, we'll jump over to the Turkish Lira. And there it is, the dollar Turkish Lira right there. Where is that? I just saw it. There it is. And it's moving down a little bit, as you can see right there on J4X. Well, not yet, but the green will show it in time. The hinky actually is still green, but the bar itself is heading down. And then let's go to the J4X. I'm sorry, the Chicago Quant, and you can see right there it is also moving down. Right there. Not much, just a little. You can see the line turning down. Same thing on J4X, it's turning down because it's following the bar, as you saw as I started loading this. And then the hinky ASCII is on top of the bar. So you can see it's still showing some strength or green, just like ours is. You can see that there. We got 3 green dots. In this case here, it's a little bit more, but that's the way it rolls. Crude oil doc. Guess what I did, Douglas? Right before the webinar, I switched crude too, because crude is expiring. So this morning we sent charts out in the. Let's show you. We sent October charts out, but it's expiring now. So what I did is I switched the contract just before I did the webinar. So here it is right there. Now we're looking at November contracts, and you can see it's flirting. Let's widen this out a little bit because you can see it is flirting to try to climb back into the buy. See that right there? It's where's it trading at right now? It's at -1. No, was it -1 a few seconds ago? Now it's +1. So yeah, it was -1. Now it's at 000. See, the box is changing as you see it as I hold the button down on it. So you know, we've switched contracts just in the last half hour, and you know, we'll see what the crude is doing. But look at the weekly, moving up very strong here. And we slid into the sell yesterday. We still have a little red going on there, and I think we're minus now. Yeah, -1, -2. Still seeing a little pressure, just like the front month it's expiring over the next 24 hours. So, how's that? Is that something? You know, it's an odd contract. You know, because of the delivery, you get 5 days to decide if you want to take the delivery. That brings you out to something like the 26th of the month. Then you take the delivery. Then you have like another 3 days to deal with the delivery. You can exchange certificates depending on where the harbor is that it's delivered, if it's down in the Gulf or if it's delivered in New York Harbor. And then what happens, other people have barges that might have to go back to New York because they bought New York barges. And so then you can exchange the certificates so you have less of a transport cost. So the delivery of crude oil is a little bit more nebulous. Remember the old days where currencies used to be a 2-day delivery? So you would let's say you were exercising British pound against the dollar, you had a 2-day delivery. You had a 3-day delivery against the Japanese against the dollar. You know, it was, you know, it's the delivery thing, the physical delivery. So in this case here, you kind of expire about 8 or 9 days before the end of the month. And then what happens, you have this whole delivery dance that goes on. And then I think there's another, not only is there a 3-day, if you're exchanging certificates of the barge full of oil, then I think there can be like an extension of another 3 days. So that pushes you into November. So that's why they allow the October contract to expire about 9 or 10 days before the end of the month. I noticed that oil and gold go up, the euro goes up. Yeah, I mean anything denominated in dollars. Let's take a look at that for you. You know, you got gold trying to go up the last couple of days. You can see that, and you can see the weekly is ripping. It's trying to get run. Now I only would wish that the silver would do the same thing. It's not. You know, it's trying, but it's not. You know, we're not getting that zip to the moon type of thing on the silver, but and you can see the silver today, you know, is up higher, but the last couple of days it's not. So, but they have that same. Anything that's dollar denominated usually has that influence. It'll march along with oil, march along with gold. It'll march along with the grains at times. You know, wheat, soybeans, and corn, especially soybeans. What other products I can identify that you are totally correct about? That is true. So that is the action we see with the and then let's show you the euro. Let's go back to the euro real quick, and then we'll go back to Turkish Lira. Right there. You can see there, the same thing. You can see that line reaching up, trying to push up. You can see it's a little bit higher today than it was yesterday. You know, it's a plus, not a lot, but some. And you can see the weekly is doing that wonderful dance of trying to go into the buy. So yeah, it's a good identification of action, cross arbitrage, I guess you could say, between the different products. All right. Remember, Douglas, it's cheaper by the dozen on the questions. So when you ask for one question, you have one question, you have 11 more to go. It gets cheaper and cheaper for the cost of asking a question, which is 0. All right, Turkish Lira again, right there. You see, moving down. I'm curious to see. Oh, look at that. The weekly is doing the same piercing right there. Let's take a look at the euro against it. And let's do this on J4X. We have it up there right now. Still trying to roll over. There we go. Same gig. And let's take a look at the euro against the Turkish lira right there. Same situation. The weekly. Let's go. You got to change that color. The weekly is trying to pierce down. As you can see there, it's below the 0 line. And this is trying to turn down also. It's got all the greens just like the way it shows on J4X. And then right, did we pass it? No, right there. There you go. And there it shows on the Euro Turkish Lira. That same situation. Right there. So that is the action we see. And that's what it is doing. So yeah, we'll see what type of action we really get out of this whole thing in the end. I myself think, like I said, I think that we're probably going to start seeing bailout money sliding through the system over the next 24 hours. So if they do let it fall, that'll be an opportunity for the central banks to buy it cheaper. Remember, the Federal Reserve is in the markets, in and out, being involved. So Douglas says Euro Yen. Yeah, let's see what Euro Yen looks like. Let's see Euro Yen. Let's see. There's Euro Zloty, Euro AUD, Euro CAD, Euro. There's Aussie Yen. Euro Yen. There we are. We keep most of the stuff in the inventory that people asked for in the past. You can see here the product went into a sell right there. This gives me a chance to show off the math. I like that. Right there. Went into a sell there. And stayed in it. And you had the volatility signal the day before, which is really cool. You can see it went into the buy here. And let's see, and we've been in a weekly sell overall for a while. Look at that. It has never come out of it. It tried. So you would be taking the sells and not taking the buys and being covered on the buys on a short-term basis. And so you would have made, let's see, where is it at? Right there. There's the buy right there, and there's the sell. So here is the buy. And then the next day it's a sell. There, and then it becomes a winner chicken dinner for you right there. You catch that whole move. Nice. Then same situation here, you catch this whole move, and then we can go back and look at, since it's in a sell since here, what you want to do is you want to take that sell right there, which is a very small win, but a win is a win is a win. So you took the short there and it went down for 3 days. Or 2 other days, let's put it that way. And so it was lower than before. So there's your first win. Ooh, here's a nice one. There's a real winner. 3 chicken dinners right there. We'll just put the sells in because the buys are just a cover and you're not getting long on them. And then you got another sell right there. Another winner chicken dinner for that whole move right there. That's cool. That's 3 in a row. Remember, we have an 8.5 out of 10 functionality of it all. Then let's see if we get some type of give back. Nope. There's another. Oh, here's a. What's that? There. No, not that. Not that. So you're still long. Remember, it's a red and green there, so you can't take that short. But that short you can take right there. So let's put that in. So that's 4 in a row. Why I love answering questions? Because I have these opportunities to show you the wear and tear. Now look at that one. It goes into the buy here, right? So you're covered for these 2 days, and then it goes back into the sell right there, and all you get is barely a day of profit out of that. And then it starts to go against you. So you could actually call that a small win if you're really good at money management, or a small loss. So that was a win. There's your, there's 2 wins. You want to try to call that a loss, you're welcome to. There's a, because it went into the sell here, and you can see, let's widen that out. You see it, where'd that go? Oh yeah, you can see that it went into the sell here, and all it did is match the same low the next day. And let's see, where did buy go? And then the day that it went into the buy, you actually got out of your money, maybe for a profit, or you're still standing around, you're short, right? And then the next day it goes into a sell anyway, so you're short for that, and there's your win again. So if you want to call that like a 7 out of 8, that's that 8.5 out of 10 that we talk about. So that's why I say ask as many questions as you want, because then Mike can show, like, what was it? Was it Oz Rome came in and said, show me your best. I said, there are no best. They're all good. Show me the best of the best. They're all best of the best. Math does it to everything. Oh, you didn't see that. I'm sorry. There we go. Right there. So there they are. There it goes from the sell when it went into the weekly sell. So there's win, 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 win. These are not losses because why, traders? We're in a weekly sell, so you can't take the long. All you can do is cover the long. If you're going to take a long in a weekly sell, you better be doing it through a binary or an option. But don't go hard delta. Don't go with spot because you might get stopped out. So whereas the options, and the binaries, you don't get stopped out. And so that one right there could be the only loss if you want to consider it a loss. So that would be the 7 out of 8 basically. And overall, it was just all winner, winner, chicken dinners. Lots of winner, winner, chicken dinners. That was a nice winner, winner, chicken dinner, that one. That was a nice winner, winner, chicken dinner right there. That was a nice one too. Look at that. From there down to there. That was fun. And that wasn't bad either. It's a cute little one. Oh, and that was a scrumptious one right there. Ever since we went into the weekly sell, that was a scrumptious win also. And then that was a mild but good from there down to there. So that's all visual now. See, Douglas. That's why I say please ask questions, because I would find something that I never show. And what we do is we put it up there naked, unless now they'll start saying Douglas is in leagues with Doc. And I'll come up with, show you the product, and sometimes we have to add the product, and then what do? We see how well the math does. Isn't that the greatest test of all? A technician, newsletter person, who shows you live, raw information instantaneously. Isn't live wonderful? What got me involved in Dukascopy at the time was this fellow who was trying to use video he was live, but he was showing you video charts of 5-hour-old charts. And it was like, oh, okay. And I said, well, how come you keep on changing your parameters of your studies? He goes, I don't. I said, yeah, you do. I see that. It's up on the screen. No, I don't. And he was changing the parameters so that his charts would look good, like winners. And all he wanted to do was advertise. And get it. Wasn't Polina, it was Gouda. I think it was Gouda. She wouldn't let him do it. She's like, no. You can't advertise. You can do charts and you can talk about charts, but you're not supposed to advertise about charts. And so, he wanted to put out his website. He wanted to talk about his company and how you could have winners like him if you just subscribe first. He wouldn't give them to you free either. He wouldn't give you a two-week free trial. No, you had to pay right off. And I just sat there and went, no, look at this. This is wrong. This guy is changing his parameters on it, depending on the chart, just so that he can get a winner up there. And they're 5 hours old. It's not live. And Dukascopy let me do it live. And I could show you live stuff and say, hey, look at this. This is the way the markets are moving. I wasn't hawking anything. I had no website. It wasn't until like a year and a half ago that we opened up something. So for like 7.5 years, Never had a website. I would send out the fact check spreadsheet for free to everybody. This fact check spreadsheet went out to everybody for free. And they still do. They still do. Oh, I hate when I hit that button and it makes me try to upload. Now I'll have to cancel from there. All right, where do we go from here? Where was I? I was at Euro Turkish Lira. Okay. So now we'll wait to see if anybody has a product they would like to look at, and if so, we'll put it up there. And if not, we'll go over to Canadian now. That's where we usually go. And there's the CAD. You can see it's flirted with that range that we've been watching for a while now. Let's widen that out a little bit. You can see there. It's not dropping down, but what's interesting is that we do see some weakness right here at the moment. Maybe this is a changing of things with this Chinese situation. And we've been in the buy since, I don't know, a while now. 6/11. What is 6/11? June? Yeah. So at the beginning of June, we went into the buy. And here we are in the middle of September. Are we in the middle? We're towards the end of it now, 21, right? Yeah, today's the 21st. So, wow. June, July, August, September. 4 months, it's been dragging itself through this buy signal. Just constantly, telling you to be long or be wrong. All right. From there, what we do normally is we look at the energy complex, because we always, in my simple little brain, I always think that the Canadian is linked. Oh, sorry, not that. But I think the Canadian is linked to the metals market and the energy market. Also, I want to put the Canadian up on J4X so you can see the correlation of the two. And that's what this whole objective is about, is to show you that we could develop a decent indicator that's publicly known. We put two of them together, because I use the smoothing out of this particular indicator on mine. So I know it's going to have a characteristic that acts like this. It may be 3 hours behind, but it's better than nothing, traders. If you're not able to tune into Doc Live, then the second best thing is to have a J4X, but which I also told Oz Rome, and Hinky Ashies. Between the Hinky Ashies and the two stochastics, the fast and slow moving stochastic, commingled, it gives you a flavor of Doc's math right there. All right, like I said, you got to be a little careful. On a daily, it can be as much as 4 hours behind. So, in lag time of matching up to my work, but it gives you an idea. It gives you a flavor, and it's a lot better to have a flavor. I mean, as far as I'm concerned, I don't find MACD or any of these others nowhere near as good as this indicating system that we've developed for J4X. That's way better. And then if you shrink it down from dailies to hourlies or half hourlies, or if you go the way Doc does with Teslas, the 369 or a 396 are usually, or you can go with a double Tesla as far as, I guess, actually the one Tesla is 693. Is that how it goes? I think that's how, no, 396. That's one Tesla. And then a two Tesla would be 693 reversed, which is like a double of the first one. And then so forth. And I call them Teslas, or half a Tesla. And when sometime, I think it was Oz Rome that asked about intraday trading, I brought it down to 69. And there's also 39, taking little slices of the Tesla and going spatial, not minutes like Newtonian type of thing. So, all right, where do we go? There's CAD. So from the CAD, what we'll do is we look at oil, and we just did that because Douglas wanted to see it. So we'll do a quickie over on J4X just to give a flavor of it. And first of all, there's gold. So we'll look at gold real quick. And let's see, where is it at? Right, gold. That's silver. There's gold. And it's showing that upwardly strength. Then we see the Canadian, which was moving down. So they're matching up, they're doing their thing. What's this one here? That is gold, okay, gold. And so it should be moving up, and it is, because CAD is going down. And then we take a look at another one. Oh, yeah, we just look at the correlation, that's all. I know it seems a little odd, but we do that. And then we go to the crude, and obviously we saw where crude was trying to move up, right there in the November contract. You can see it's higher from yesterday. Same situation. The daily seems to be moving down more now. You see we were at the zero line at one point. Now we're at -7 now, minus 0.07. So, but the weekly is holding up very well there. And then we jump over to, we did the crude, we did the gold. Okay, so we're done there, and then what we do is we do another currency pair that we think has that same correlation to the metals complex, and that is the South African rand, the dollar rand pair, right there. And so the rand, let's see what it looks like. We'll put it up on the screen here. There it is. So it's moving up. We were hoping to see it moving down so that we could say this is how we look at it as the correlation. You can see it did make a low today right there, but it's taking back up again. I guess that's because the oil and the gold are moving off their highs. But you can see that weakness. Who knows how much South Africa? We don't even know how much South Africa is influenced by the Chinese, financially. So it could literally be part of the Grande situation, the Evergrande situation overall. And as you can see here on the J4X, it's moving up very strongly, very clearly, lots of green, letting you know that it's trying the upwardly direction on a day-to-day basis is that. And that's why also traders, we look at it day to day. Doc at a long time would just have a little window. I'd use my camera to show you the euro trading live. We used to do that and go through the dailies at the same time. All right, from there we jump over to the ruble, and it's just an emphasis of the dollar itself, nothing more when it's weak or when it's strong. You see it's going down, the ruble, so it's obviously doing the same thing. It's confirming that the dollar is being sold down. And then we take a look at it here. Whoop. Right there. And you can see it is also being pressed down. And we're still in that weekly sell since here, since this area, and you can see it's been sloppy. Goes down, goes up, goes down, goes lower high, down further, newer low from this range in here. And then now you can see it challenged the high, and now we did a higher high there. So we'll see what that means. We've been in the daily buy for a couple of days here now. Let's put a bar in there too. But it's inside a weekly, so all you knew is not to be short, the idea is not to be long there. Unfortunately, there's not some really good liquid options to those things or binaries. But if you can find somebody that has them, I thought Dukascopy does have binaries in this area, so you can always check out their binary situation. All right, for options, they're like non-existent, unfortunately. From there, we go over to the yen, see what they're doing. You see the yen moving down against the dollar for the last day or so, and we flirted into the weekly buy, which also gave me comfort to be long those binaries and puts on Friday. When I saw all those things doing it, I knew there was a panic going on. And sure enough, it played itself out Sunday into Monday. So here you are there. You can see that pressure there. You can see the weekly has rejoined the downside. So we can take this, move that over to there. Put the little bar in it there. Remind me, traders, to save this so I don't have to do this again. And then we can change the color of that to there. There we go. And then let's do a save, like so. Save as. For a Dukascopy day. Week Forex, there we are. Yes, Dukascopy day, week Forex. Boom. All right, and then let's check it out on the J4X there. dollar yen, right there. See? Down. And then the hinky will come in. There's the hinky's red too, so that's cool. Just like our red dot there. And the correlation there. See? There we go. Alright. Oz, I was talking about you. I was giving you compliments. Good morning to you too. I don't know if you heard earlier or you're just tuning in, but be careful tonight that the Asian markets are going to be reopened. So you're going to have Hang Seng, and you're going to have Shanghai BNA and all like that trading live again. So I'm convinced that the Federal Reserve is going to come in and bail out this evergreen, and because I know in my heart and mind that X and the Communist Party have already said they have no interest in bailing it out. So I think that's how that's all going to play out in the end. So if there's any weakness at the beginning, it's probably worth being bought. We'll see though, because we only follow the numbers around here in the end. But I want you to be aware of that. I've been saying that earlier in this whole situation. All right, where do we go from here? And if you want to see anything, Oz, just give a yell. We'll put it up there. Let's see, where did we leave off? We left off at dollar yen. So let's take a look at the Mexican peso, or dollar peso. Up a little bit against the dollar. You can see it right there. You can see the last couple of days, J4X is pushing it up. And I'm sure we're seeing the same action in our charts here, if I can find it. Where are you? There you are. Yep, green, just like J4X. See? Green, green, up, up, white line above. The what I like to refer to, the dash line, is the three-dimensional zero line. And same thing here. White line up past the zero line there. There's the zero line, and white line's above it. So, what else we got to say about that? Not much more, you know. So that's the Mexican peso. So that's the end of the pairs trades that we normally look at. If anybody wants to see any other pair trade, be my guest. It's just a true entertainment to me. Honestly, if you just pick a name out of the hat and throw it up there, I love watching to see what my math has done to it. Remember, there's a limit to the amount of time I have in a trading day. So, I mean, I look at a lot of charts already, but it's always nice to have somebody say, hey, Doc, take a look at this. That's probably one of the greatest things I enjoy when with dealing with Chicago Quant, is that someone says, hey, I want to see rice. I was like, yeah, I want to see rice too. Or I want to see oats. It's like, yeah, I want to see oats too. I want to see what the math is doing to that. It's like Christmas morning, coming down and seeing the gifts underneath the tree. Every time someone says, I want to see this product, Doc, in your math, it's like, yeah, I want to see it too. I'm excited just as well. Alrighty, where do we go from here? Let's see, we move away from the pairs and we head into usually the energy complex. So we'll take a quick look at the energy complex. Oh, what else did I want to do? I want to double check one more thing. Is that the DBA? Yep, good, I can do this. I need to send something to Robin. I just want to save that. There it is. Scroll that down. We'll take care of that, and then we will go look at. We'll take a look at like natural gas, and we'll take a look at tags. Tags is not updated. I hate that. It drives me crazy. Tags does not want to update. All right, so I'm going to save that, and then give that to Robin. Right there. And then last but not least, we'll look at the IWM, which is looking awful hot. It's looking so good. Me so strong. And then I wonder what we should do is we should take a look at Bitcoin too, see if it's coming back from its slam. All right, and then I got that, and then it's in a cent, and then we'll go from there. There we go. There we are. And attach. And now we can go back to that screen and take a look and see about natural gas, and we'll take a look at platinum, and we can take a closer look at silver, that type of thing. There we are. B. Cent. There we go. All right. Switch over to right there, and you can see that's cattle. But let's go to the silver. Oh no, let's do this. Natural gas first. There's natural gas because we haven't shown natural gas. See, the pressure is on that still, and then there it is live trading it. Today. You can see it's been in the sell from here, but we're in a weekly buy. We've been in a weekly buy since back here. So this is just telling you to keep the money you made, and you can just watch it drop and you not get clocked. What's my high? That's an interesting question. What's the highest probability? We identified that, and it's kind of interesting. Look at this. I'm going to show you one that I find very fascinating. The Euro Turkish Lira versus the dollar Turkish Lira really sticks out in my mind as one of those. I don't know, there's more of them out there. But check this out. We watch it every day here on Dukascopy, And here is the dollar Turkish Lira, and you can see there's a lot more trades in it, all that stuff going on. But it really lags, in many ways, the Euro Turkish Lira. See where, let me just see what the date was there. So there is 7/19. Now, the Euro Turkish Lira, to me, is a higher percentage winner, but less trades, which is interesting. Right there. And at the same time, when we scrunch this up, it went into the weekly sell 702, okay? Whereas the other one was 719 on the dollar Turkish Lira. I find this to be the higher percentile winner. There's a good example. This pairs trade the Euro Turkish Lira versus the dollar Turkish Lira. I find that to be very fascinating. I think it's location. I usually say that too. I think that due to the fact that Europe and Turkey are basically adjacent, there's more trade going on, so the currency activity has to be more legitimate, less speculative. That's what I'm thinking. So in other words, when someone in Europe wants to buy something from Turkey, they go in and they buy Turkish lira and they sell euros. And since location is so close to each other, you have to assume that they must trade more with Turkey than the United States does, where you have like 7,000 miles or 6,000 miles to go. So I find that that's in my head, that's how I look at it, as a how'd you phrase it? You phrased it, what's the highest probability trade? I guess you could say is that the probability of having bigger wins or more consistent wins is a Euro Turkish Lira pair versus a dollar Turkish Lira pair. They're both 8.5, and they both, they may be a little off here or there, but they're on the same average. But the thing is that you don't get whipsawed as much, like you're not getting in and getting out. In the Euro Turkish Lira, it's more consistent. Like, look at this sell. I mean, look at this. I mean, when it went into the weekly sell, it rode for a whole month in a daily sell. Oh no, wait a minute. There's the buy there. Where's the buy at? Is that a buy? There's the buy there. It was all the way for like almost 3 weeks. There was a buy, then it went back into the sell for a couple of days, and then it went into the buy, and then it went into the sell again. There's a little whip there. So that's like 3 trades, but it seems like the dollar pairs trade with the Turkish lira is just so much more action, so you're in and out, And then you can see here, you know, it rides longer. You had a little change there, and it rides longer, right? And then you get your buy there. Then you had that strange fat finger when U.S. was closed for Memorial Day, Labor Day. And then sure enough, it found a way to get there though. And then you have a sell there. At the same time, the weekly was over the weekly number, and we were talking about being careful with that. And then you go into the daily buy here, and you get that action. So I see the Euro Turkish Lira a better trade than the dollar Turkish Lira. I'm trying to think who else does that. There's a few other products I've seen that have what I consider, when you say high probability, I look at it as less trades but makes the same amount of money, which means you're paying less commission. You know, everything fits into my head, you know, through that whole process. So, let me think. Who else is there? Let's see, crude oil, natural gas. Compared to, let's go over to natural gas. Let's see, where's that at? Natural gas has that same characteristic versus crude oil. Crude oil can be much more volatile and all over the place. Natural gas is slow and steady and consistent. Let's go over to that right there. Is that it right there? Oh, right there, there it is. No, that's not it. We're on the wrong one. That's the intraday of the stock indices that I... There it is, natural gas right there. So natural gas is another one of those, you know, where the changes in the weekly and the daily are small. Yeah, I mean, not small, less, and the trends carried longer, like right there, carried longer in that sell. And then when it went into the buy, look at that buy there. When it went for a while, that buy. Then it, you know, goes into a sell and back into a buy again. There's consistency, less trades. So that's how I figure it. Copper, that's an interesting one. Copper, yeah, it can be all over the place, and I'm sure because of the, I mean, copper has a good trend. It is better in many ways than silver or gold when it comes to the continuity of it. But at the same time, with China right now upside down as usual. You know, Doc always thinks China's upside down, you know, when it comes to the financial side of it. You know, when you buy a Chinese stock, you don't even own equity in China. You own equity in a shell corporation in not Belize, but in the Canary Islands or something like that, or in you know, the Caribbean somewhere. You own a shell company. You don't even own stock in it. You only own equity in a shell corporation that doesn't have assets. So it's kind of like a stock index in a sense. You're buying, like, when you think you're buying a Chinese company, it's like you're buying a shell company that acts like a stock index. So we got to get out of here. The markets of the U.S. markets. But here's copper, and then we'll go from there. Yeah, I find copper doing that too, which is kind of nice. Let's see, it went into the sell right there. And it goes right back into the buy there, and there's more continuity, and it goes into a sell. I guess the sell was right there, and that was totally wrong. Now this is really sloppy and bad, and I think all this is the Chinese at this point. It has stretched our 8.5, so we're probably going to have some nice big wins over time that'll straighten it out. But in the last month, you know, with the Grande thing, it's been really upside down. So, which just means that some of the future trades in this product after this is all cleaned up will be, you know, really, really good. Remember, copper is the gold of China. So, all right, this is Doc from North America. We will catch you all tomorrow, same time, same channel on Happy to Hump Day. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta for now, traders.